Hey everyone, happy Wednesday. We're back here in Canada. Had a bit of a time in Ireland. It was wonderful. It was very nice, but we're back here. And while we were gone on the 14th, gold hit 3,000. So we had just talked about it not too long ago. We're obviously, it goes without saying, very bullish about precious metals moving forward. Nothing has remained unchanged regarding that stance. We see it only growing stronger. And certainly we're not the only ones. So it's sitting very well today. Silver, sitting at, I think, $34 today, which is outstanding. This is unprecedented for gold. Silver has popped up higher in the past, and one could argue certainly that there is perhaps a more of an upside if you want to take a commodities play or investment angle to it on the silver rather than gold. And UBS chief investment officer, they came out first off to say, hey, we're changing our gold projection for 2025 from 3,000 to 3,200. So they've jumped it up. Similarly, ANZ Bank has also raised its 6-month gold forecast to 3,200 as well. And I think beyond that, we'd seen that Goldman Sachs had said they had a $3,100 target for the end of 2025. UBS has increased theirs to 3,200. Deutsche Bank had a target of 27.25, and I think a high end of 30.50. So we're going to get through that for sure. And JP Morgan had a 3,000. So I think 3,200, I think that's, to go without saying, that's a pretty reasonable expectation. We're seeing higher inflation numbers here in Canada. There's likely going to be more inflation. And you look at, if you look at the precious metals, but you look at copper, how it's done in the last month, it's screaming, it's doing great. And, a lot of this is coming down to, not just, the tariffs, but it's this reorganization and flow of materials that we've been talking about for a long time that had to come sooner or later. You have to ask, and I'm not asking the question because it's not what we cover, but do you have the right team involved to be able to do this transition correctly? And to ensure that the trade partners and where the West is getting their critical metals from fits standards, responsible standards that we expect, and that you're going to hold true to those rather than kind of talk out one side of your mouth saying, hey, we're all for ESG, and then really kind of avoid a lot of environmental things because you can get things cheaper out of the ground in other areas. And the constant theme that we talk about in regards to metals and mining and whatnot. It's a bit of a quiet week this week because everyone, I believe Zurich has the last 5 days conference going on. I think some people are in California for a Roth event as well. And people are just coming back from PDAC. So people are going to be pretty tuckered out, running around everywhere, talking about stories. And our whole attitude has not changed in regards to the stocks and companies we like. We think there's a huge opportunity. Overall in mining, there's an obvious opportunity with critical metals and precious metals. But, the Canadian factor, there's companies we really like. There's companies that are situated very well. It's going to really come down to, unfortunately, a lot of policy. So whenever we have an election, whoever happens to win, if they're pro-business, if they start to look at properly applying permitting and really trying to get resources out of the ground, Canada's going to do well. If they don't, we're going to be in trouble. And you can choose who you think that person is. We'll just be really focused on seeing who's presenting a plan that looks like Canada will do well because Canadians aren't doing well. The Canadian dollar is dropping more. Now, luckily, hopefully, if you had been buying gold in whatever form, as an ETF or physical bullion, you've kind of sought some protection and you've done well. If you've been sitting in cash, you're getting hammered. And hopefully you'll be talking to your advisor about that and about solutions, because still not a lot of people own a lot of gold or precious metals at all. A lot of people still think that it's an ancient traditional type of investment. And if you've watched anyone who's kind of an analyst, influencer, newsletter writer, whatever you want to call them in the space, it's much more than that. It is wealth. And if you had been able to protect yourself with purchasing precious metal, you would avoid a lot of the problems that we had here in Canada in particular, but also the US. I mean, it's over 3,000. When we first started talking about gold, it was 1,100. Now, once again, that's a huge rate of return if you had an investment in something. But this isn't even an investment. This is wealth. So this is your basically equivalent to a near cash position or a cash position. I would argue you should be sitting in gold rather than a GIC, unless you have like specific needs for immediate cash on hand. And the environment isn't changing. Whether you're an optimist about the future, whether you think there's solutions coming regarding the economy, both here in Canada or in the US, it's going to take a lot of work. There needs to be a significant approach to managing debt levels. GDP per capita in Canada is constantly be declining. We need productivity. We need investment into Canada. There's a lot of things, and those are things that are well outside of our control. We watch them and we hope for the best. And we try to kind of keep it to that point and leave all the other politics stuff out of it, because that sometimes can be distracting. Although I would argue a lot of it is, if it's distracting, it's pretty horrible. And I don't see that calming down anytime. So we try to extricate ourselves from that because a lot of it's noise. And on top of that, most of the mainstream news is kind of nonsense anyway. Most people, I think, recognize that. Their numbers have steadily been decreasing over the past 8 years to a significant level. And it's just, human nature. The days of having unbiased, healthy debate for the betterment of our country are long gone. I think most people accept now that a news agency will have a bias. If they're progressive, what they're going to be pitching. If it's Fox, what they're going to be pitching. So we have to kind of put that hat on when we're looking at any data or any information, and make no mistake, this goes to investment banks as well. They're just as political as anyone else. And they have visions of what works best for their banks, for their investments, on a global theme. And they have no problem pushing narratives as well, if it suits them. And we see that certainly we talk about a lot in the blogs about all the banks removing themselves from all the climate accord kind of stuff. And to me, the big question with that, I ask people is, if all these analysts, who are, a lot of them, I mean, some are like rocket scientists that work in investment banks. These are very smart people. If they're looking and saying, I think we're happy to step away from this, then there doesn't seem to be a real strong commitment to that ideology, as much as one would think. So it's a very head scratching period of time, and it is not easy to find accurate information. And just as I'd learned whenever I was young, is if you can get 3, 4, or 5 different opinions or points of view, whether that's, say, I won't look at CNN, but say you go CNN, CNBC, Fox, Al Jazeera, some BBC, which is pretty much CNN as well. If you try to find ones that maybe you don't like and look at the perspective, you might find in between all of that bias somewhere the truth lies. And unfortunately, to have an opinion nowadays, that's kind of the level of work you have to do. And that can be quite exhausting. And that's pretty much what most of the news is right now. It's a lot of this is the tariff kind of war, trying to figure out what's happening there. And that is having obviously huge effects, particularly on Canadians. It's very difficult for us. And the sooner we can have a remedy to that and a solution, which I believe comes in the form of an election, we'll get some sort of position from both parties as to what the solution for economically moving forward. Then we get we can hopefully vote on that and say, hey, we think moving forward, Canada should be doing the following in order to say really do a good, strong transition. Well, we should be selling tons of energy, and we've been having lots of energy discussions and research regarding oil, natural gas, as those relationships are shifting and changing as well. There's a deal, I think Alberta has done a deal here with Japan, and that was interesting enough as well. So there's a lot happening, and in the meantime, a lot of Canadians don't have money to be throwing around at stocks. So even the great stories, the companies that are doing outstanding work and outstanding jobs, they're at pretty low levels. I mean, you can get into them, and that's good, but it's also stressful because people aren't seeing an end in sight, and it is challenging right now. And I'm kind of an optimist when it comes to things like that. I mean, I look at risk all day long. I have to evaluate the worst case scenarios and start from there. But I think we can just hang in there. It always gets to the worst before it starts getting a bit better. And I think we're pretty close to that cusp of the worst. It could still get worse. I mean, I don't want to be, but I feel like enough Canadians have had enough. They want to focus on Canada being wealthy. It's wonderful to say, hey, we want to help the world and we want to, be very charitable. But you need to come from a position of strength before you can help someone else. If you don't have something to offer to help, then you aren't of any help. So it's time for us to once again take care of the people that we have here, give them opportunities, help them flourish, and a lot of that is mining, and that's why we try to keep lots of different guests on to show young people as well that listen, there's a huge future in this, and a lot of really interesting jobs, whether it is more the data science and AI that's being applied. We've done shows on that, or it's pure prospecting where you're out swinging on mountains or going through jungles looking for amazing rocks and trying to find deposits, or it's that you just love more the engineering and you're working on actual engineering of a mine plan. There's no end to the different applications and levels you can take that job. And right now, there's so many people just saying, what am I going to do and what should I do? That's a huge industry that is desperate for people. And I think even both parties, I think they have to come to terms with that we're a resource country and we have an opportunity right now. And that's my story, and I'll stick to it. And it's being shown right now, certainly in most of the commodities. And that is a huge opportunity, whether you like the stock side of things, or certainly if you've been playing simply the commodities, then you're a very, very happy person right now because you would have done very well. Now, there's been some kind of FTC rules down the States. There's been a little bit of a brouhaha there as well. I mentioned it because, yes, it's political, but at the same time, when you look at the commissioners there, it's traditionally supposed to be a bipartisan body. There was one seat open, 2 Democrats, 2 Republicans. I think Trump just dismissed 2 Democrats. So that's obviously causing quite a stir. We have no comment on that, but of course there's a lawsuit now and whatnot. But it was Rebecca Kelly Slaughter and Alvaro Bedoya that they let go. And so, I mean, there's people can clearly say, listen, whatever they're trying to accomplish as far as regulatory work, maybe they thought that they're a deterrent, that they stop projects from moving forward, and they wanted to remove them. Well, we're going to keep an eye on it to see, because once again, unfortunately, politics does play a key role, especially if you want to compete with China. I know most people try to avoid the discussion of politics. Some people even say it really has no business in finance. I obviously completely disagree because yes, we switch people in 4 years or 8 years, but in that period of time, if you're able to get a stronghold and change laws or get things in your favor, it's better to get going quickly than to wait. And right now, what we see in the U.S. is whether you like it or not, the speed of which change is happening is incredible. And to be honest, I think there's a lesson in that in a positive way, is that we keep on hearing about, these things take time. You have to do this and you have to do that. That bureaucracy is so slow and it's so awful. We see it, especially in Canada. And the further left you go, the worse it gets. And you realize, no, huge mammoth countries can shift very quickly if you want to. And, they had an election and the desire was, we want to change, and they're doing it very fast. And that should be a wake-up call to everyone that just because someone says you can't do something quickly, yeah, you can. You can just do things, and then just this is what the tech world does, and we talk about it is you just do it, and you do it at scale, and then you just let the lawsuits come in. And at that point, you've got so much momentum that it's hard to stop that momentum. And a lot of people would have a lot of problems with that, but there is, to some extent, there's something to be said for that approach to things. And we'll mention it as well because it is newsworthy and it's not really our focus. But Berkshire Hathaway, I think they've doubled their cash position. So of course that's Warren Buffett. I think he's sitting on $334.2 billion in cash. So once again, what's that telling us? Well, it's probably telling us that there's a lot more room for, especially these Magnificent Seven stocks that are pretty overpriced. And even though they've come down a bit, which once again, when people say, oh, the stock market could drop and whatnot, yeah, I think a lot of it should. And there should be more of a rebalancing. People should be looking to say, if we're going to work on infrastructure and if we're going to try to compete to say, hit COP28 goals of having X number of nuclear reactors, well, you're going to have to put a lot of funds into infrastructure. That means siphoning it away from just throwing hundreds of billions at AI and saying, let's start building some things. And if we're going to build 40 more nuclear reactors, that's going to require a lot of investment. But it's also going to require a lot of investment in education, getting engineers, getting specialty construction crews. That's great for the economy. I mean, that builds up. That's telling people, listen, we've got jobs for you. And that can be exciting if people pull together. What holds that back is the fact that China, they can do things. They simply do it. What happens here in the West is that as soon as you try to do something, there's going to be somebody or some NGO or special interest group is going to try to stop you. And yes, it's good to have checks and balances. It's absolutely necessary. But my argument would be, if we're facing this life-threatening climate emergency, then that's the hat we should be wearing. And we should be doing things at a very, very fast rate in order to get the metals out of the ground, to solve the problem, to create the energy, all the clean energy we want, and also use some of the money that we're getting from oil and gas. Because once again, you're still going to be using oil and gas. I mean, you have to look at what it's used in everything, and oil's in everything. Now, can we cut it back? Yeah, of course we can cut it back. We can stop the growth a little bit. I don't think it's going to happen anytime soon, but it has to be properly funded. And when we talk about Canada, it's challenging to say, who really wants to invest in mining? China. It's like, well, Canada's not so open to having a ton of Chinese money come in, especially for lithium. So, you're like, well, why are you hitting us with both sticks? We did a little blog talking about, Canadian pension funds who really don't invest in Canada very much. We've got a blog on the basic amounts because it's very hard to find exactly where they put their money and what they put their money into, but it's somewhere below 3% energy in Canada. I mean, that's really poor. And that includes mining as well. So whenever your own pension funds aren't really that interested in looking at investing in your country, that doesn't send a strong signal to the rest of the world. And I don't believe that one should force, because it used to be that the funds had a specific amount that they had to invest in Canada. I don't know if that's necessarily an answer, but you'd certainly hope that the case could be made for pension funds to say, yes, we think that there's an opportunity here. And if they don't, that's telling you a bigger problem that we have. Once again, a lot of things in the world you can look at and go, follow the money. Where's the money going? And that can tell you where the conviction of either politicians, investment banks, analysts, that kind of is a better telltale sign than any of the talking. Same as people. You can talk a lot. It's what are your actions? That's the clear indicator. And that's where we try to follow as well. As you can listen to people, listen to policy or politicians, God forbid, hope that they'll do what they're going to say. But it's really at the end of the day, you look to see what are the actions they're taking, where are they placing their money. And when we look at precious metals, it's just going up. We don't see that changing anytime soon. And that I don't say that gloating, because at the same time, that's saying this is an acknowledgement of how stressed the world, but especially the West is economically. People are having a very tough time. and inflation's roaring up a little bit here in Canada again, and just the cost of living it's shocking. I think I saw a post here that was saying if your parents, so if it would be my generation, made $100,000 in the 1990s, that's the equivalent to about $254,000 today you'd need to be making. That's insane. That you have to make $250,000 for that to be equivalent. Now, don't quote me on that because it was a quick headline I saw, and it to me it sounded high, but then I thought, no, that does sound that does sound accurate. Things have inflated so much, and it's unfortunate that that's the case. And there's a lot of work that has to get done. So we hopefully will see a lot of change, a lot of policy change, and quite frankly, and I don't mean this fake patriotism we've had lately, which I find kind of annoying, but some real patriotism is into what built Canada, what built the West, and the acknowledgement of reality of that's resources. So if we see whoever happens to be in power, that they acknowledge the reality, the economics and the finance of where Canada has done well in the past and where it can do well in the future, great, let's go. But until then, we've got lots of chaos ahead, and that means precious metals are going to keep doing well. I'm going to give a bit of a shout out and sign off a little bit early because there's a lot to do, and we're just back from Ireland, so I'm trying to get caught up on many things. But next Friday, so that's the 28th, definitely tune in because we've got Mr. Douglas Balfour Silver. He's going to be on. This is a Canadian Mining Hall of Fame winner, really well known in the royalty space, amongst other things. But in the 90s, he's president owner of Balfour Holdings. He's been involved with the Denver Gold Group, a ton of Canadian listed companies, and once again, notably for royalty and streaming sectors. In 2005, he launched Royalty Corporation, IRC, and grew revenue from $400,000 to $50 million by 2007, and sold the company for $749 million in 2010. He also joined private equity firm Orion Resource Partners. He did a great presentation at VRIC about are you invested in a lifestyle company? So we're going to talk about that because that is something we like to talk about. When I started doing this channel and talking in the newsletter, it was highlighting that, yes, this has lifestyle companies in it. How do you identify those? So it was wonderful to see someone who takes an exceptionally analytical approach, takes a lot of time to crunch numbers to look at, maybe you're invested in one, you don't know it, but the things to look for. And you will be surprised because it's a very interesting presentation. I really liked it. And you're going to be surprised by some of it. Some of it you won't, but I think some of it you will. And it's very fair presentation, and the numbers don't lie. So definitely check that out. Have lots of questions either beforehand, send them off to me, or just type them in the side there when we're live. But that's going to be a lot of fun. That's important for people to get into, whether you're new or you've been around for a while, because you might have very strong opinions as to and we're not going to name companies specifically. I have no interest in calling companies out, but it's not hard to when you see the mix, the recipe, or the criteria and evaluation to see which ones are obvious. And then the nuance of, there's lots of ones out there that I see all the time in forums. Oh, this is a pump and dump. And they're not. They're just not. So, there's a lot of times when a stock just goes down and people think, oh, it's a pump and dump. And no, there's a very specific criteria that and also intention from a pump and dump. There are plenty of companies out there that are real, that have great projects, excellent management teams, that stocks have dropped for whatever reason. But it could be, well, one fund had to sell $500,000 worth of its stock because it had to rebalance, or it had to do something, or had a withdrawal. There's a million things that could cause a stock to go down. It doesn't mean that someone purposely pumped it and then dumped it, although we all know it happens. So anyways, that's going to be a really interesting one that I would encourage people to come to, because this is the fun part for me, is getting to pick the brain of someone with that much experience, who's done so many incredible things, recognized, both. I think he's the only person to do multiple presentations at SME in New York. So we're getting a chance to to learn from someone who's got a lot to share. And that's what makes the job fun for me, and hopefully does for you, and will help to get us on the right path, picking the companies in our portfolios for the year ahead. Anyways, everyone, I'll say goodbye now. I hope you had a great St. Patrick. It was good for us here. And also, we're going to be streaming also on Rumble. We're shifting away more from YouTube. We're going to test out Rumble. Lots of reasons for it. Primarily, I really like Peter Thiel. So I like Peter Thiel companies. We did very well with Palantir. That we talked about that just a year and a bit ago. And it went from $16 up to 100 and something. It's now, I think, at 88. We like what they're doing. Palantir does some incredible things. Interesting stock all on its own, but that's a Peter Thiel company. Of course, Peter Thiel is PayPal, part of the PayPal mafia, friends with Elon Musk. Mark Andreessen from Andreessen Horowitz. This is the crew that, or the technology crew that shifted from that old one from the past 4 years. This is the new technology crew that has the ear of the president. And I think that matters. Anyways, I think Peter Thiel is a really interesting thinker. He's on the Hoover Institute quite often. He has other opinions other than technology. Very interesting person. So, hey, we're going to try out his platform of Rumble. It's also a free speech platform, which we appreciate. You don't get dinged for saying keywords, certainly in the past. Like if you talked about COVID or if you talked about anything like that, you would immediately be, blocked or censored. Even if you weren't criticizing it, you just mentioned the words. So we don't like that type of stuff. It's pretty frustrating. And we don't like the way the algorithm works on YouTube. We're still going to be on there, but we're going to try out Rumble as well. So make sure you go over there, sign up there too. We're going to test it out and see how that goes. We thank everyone. And we're looking forward to a very interesting spring coming in here. Take care. We'll see you this Friday for another show. And we've got some really interesting guests coming up other than Mr. Silver. So take care, everyone. We'll talk to you real soon.